Good Thursday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with my co-hosts. We got all three again. Wait, twice in 1 week?
Yep.
All three of us get together. This is a miracle. This is a miracle. Lousy stock market environment, but a great environment on the Jon Sanchez Show.
How do you know I'm not AI?
Dwight, as handsome as you are, there is no AI model that could even come close to you, brother. There is no AI model.
It took me a while to find the guy.
It's going to be a scary time when we find AIs. Yeah, that's models to replace us. Yeah, that's for sure. Dwight Millard, Highlands Mortgage. How are you, my friend?
I'm doing fantastic, John. A little bit better than you, I'm sure, right? We had a little bit of a rally.
Been a tough week. I am so glad tomorrow is Friday.
It has been.
Yes, indeed. It's been a tough one. Yep, we're going to give all the details. Mr. Corey Edge of Edge Realty. How you doing, Big C?
I'm doing fantastic, buddy. How are you?
So good. So you were mentioned off the air, but I think this is an important kind of little public announcement. You just went and got a whooping cough vaccine. You said whooping cough is going around the schools. I didn't know that.
Yeah, we got a notice yesterday from one of my kids' schools, and my wife said I'm past my 10 years, whatever it is. So I got to go visit the gentleman and get a shot.
Was it in the butt or in the arm?
No, it was in the arm. I was going to try to say something funny, but that wasn't.
You don't have to throw that in there.
Well, yeah, who knows what's in the needle? Now I got a tracking system.
Yeah, of course, a little loopy today. We'll know why.
Yeah, if I start coughing.
And Corey, while you're in there, since your wife is a doctor, but you haven't kept up, with the vaccines, I assume you probably did not get your tetanus shot while you were in the doctor at the same time, right?
I don't know what I got, John. I got told to be somewhere at 2:30.
Dwight, doctor makes a big old cocktail.
There's probably not even whooping cough going around. It was just a ruse.
Right, exactly. There you go.
Reason to get Corey in.
That's right. They may have just given you a placebo, Corey. It could have just been sugar water. You never know.
Corey, you might have some measles. I see up there.
Yeah, exactly. If we notice you start turning real red, we'll tell you during the break. Okay.
Yeah, could be a slow poison.
Just give us a heads up so we can mute your microphone and take you off video.
Now every parent listening, John is freaking
exactly.
out.
Call the doctor right now. That's right.
Corey, you want to give out your phone number?
No. Well, I do at the end. It's my office.
555, I hate shots. That's Corey's number. Goodness. All right, folks. Well, let me tell you what we have lined up for you today. We're going to talk about, as Dwight alluded to at the beginning of the show a few moments ago, it was another tough session today. Things significantly got worse than what we've been dealing with these last few days. I'm going to tell you what's going on. And once again, hopefully you heeded my advice. Was it yesterday or day before or something about that? I heard in the last couple of shows talking about this is a time, folks, that you need to be paying very close attention to your asset allocation and your 401ks, your investment brokerage accounts, etc. You need to be taking a look at it because we're in a different world right now. They are just throwing the towel in on AI, tech, you name it. But boy, are they loving some other areas of the market. Like, let's see, what was our leader? Oh, it was Travelers. Yeah, insurance led the pack. And then Johnson & Johnson was number 2. How about a little Coca-Cola to wash down that Johnson & Johnson vaccine, Corey? That was a third best performer. And then Merck, another pharmaceutical. But other than Cisco, which is there, it was all selling off at the bottom of the hour. Or at the bottom of the list. Unfortunately, we had some sell-off in Amazon. Company reported after the close. We're going to give you all the details of that. Corey, I enjoyed your question today in regards to Amazon and Google and a few things related there. But it is the heart of earnings season right now. And I think what I'm seeing, guys, that I'll share with all of you is this. This is the first quarter that I can't remember since I've had to say this. A lot of companies are missing their numbers, and they're missing their numbers big. And because the market has been so lofty and record levels, there is no room for error. If you're not exceeding Wall Street's expectation, whether it's on the actual earnings numbers that came out the previous quarter, or if your guidance is lower than expected, that seems to be the case right now. Companies are reporting pretty good quarterly numbers, but whether they're doing it on purpose, which I don't think, they're being very conservative on their guidance. And the guidance is coming in on an earnings per share as well as a revenue basis below Wall Street's forecast. And they're just taking them out to the woodshed, to use that old saying. And we saw that over and over again. Or Corey, as you and I were chatting about, we saw it with Google, right? Great earnings numbers for the previous quarter, great guidance. But oh no, they're spending too much money on capital expenditures and they beat the heck out of the stock today. Just like they did in the after hours. Well off the lows. It only finished down $2 and a penny to 331.33, but it had a lot of negative impact to other related names. I mean, we had NVIDIA down $2.38. Broadcom had a small gain of $2.46. rough day for Microsoft. $20.52 loss. That stock broke the $400 mark, 393.67. That was a 4.95% decline. And then we've got the cryptocurrencies just absolutely falling apart. Bitcoin down about 13% for the day, moving below the $64,000 mark. Now, just to give everybody a perspective, whether you trade crypto or not, this I don't know what you call it, crypto, or, I mean, this currency or whatever you want to call it, whatever asset category, because we don't use it and I don't trust it, that falls into. Remember, this was up, what was it, Corey? 23, 125, somewhere right around there.
Yep.
And now here we are at $64,000 in no time at all. In no time at all. And remember, I want to remind everybody while we're on this subject very quickly. And again, we don't use it. I've never believed in it. I don't understand it. And so I don't personally invest in it, nor do we, of course, have our clients personally invest into it. But here's a quick reminder. This area, who knows? It could turn around tomorrow. It could turn around right now. Who knows? But let me just tell you this. This is a very dangerous area right now because remember, many of you are buying cryptocurrency in brokerage firms that are leveraging you, whether you want to or not. And so what's happening, if you read the fine print, not for all the brokerage firms, but for a lot of them, if you read the fine print, if Bitcoin or whatever the crypto is, if it drops below a certain level, that brokerage firm can sell you out. Right, without it contacting you, picking up the phone, sending you an email saying, "Hey, bring in some cash like in a typical margin loan." These rules don't apply to cryptocurrency. So what happens when you have these down days like we've been experiencing? That's when you see the selling really, really accelerate. That's the brokerage firms dumping it, right? Because they have a legal obligation to do so. And you, again, log into your account, 5 o'clock at night, and maybe you had $20,000 in there this morning. Who knows what could be worth right now, right? Because they sold you out because the crypto was falling so much. It's really a tough one. It just, again, accelerates the selling because you get all these brokerage firms doing it. It's not really you, the retail investor, or I don't think it's even the institution side, Corey, but I think it's just more of the similarity to a margin call where you got to get out. The firms just sell you out.
It was interesting to listen to him talk about it today as it was cascading down and the liquidation calls. I don't know if they have the numbers correct, but they were saying $2, $3, $4 billion at a time being sold because the accounts were getting liquidated.
There you go.
And you could just watch it stair step down.
Yep. And I didn't see that. That story. So I'm glad it's agreeing with what I said. And guys, we learned about this, and I'll be honest with you, since again I don't trade it. I didn't know that type of selling could occur until the last cryptocurrency sell-off we had. I don't remember what that was, a month or so ago. And I researched, I'm like, why is this going down so very fast? And man, I dug deep into it, and that's what it was. These firms just able to sell you out. So it is a dangerous one. So you add that to weakness in, quite a few other areas of the market. You had weakness in gold prices today. You had weakness in treasury prices. I mean, it was just, again, one of these days. But what I don't like, and I'm just going to emphasize this one more time, we're seeing way too many companies giving very bad earnings guidance. And again, in all aspects, whether it's technology or any other area of the market, you're seeing it. And so I would not be surprised if we find ourselves in a 5 to 10% correction here short term. I don't think there's anything permanently wrong with the market, but I think right now, when you have these lofty levels like the market has been, and a lot of individual names, and especially in the tech space, they'll use any excuse like, oh, this company missed earnings numbers or gave a bad guidance, and they just pound it into the sand, and then this happens over and over again.
John, do you think you'll see, like you did today, a flight to safety? Do you think this is going to be a trend? This will be an interest rate.
That's a great question, Dwight. And what Dwight's referring to, flight to safety, that's a term, of course, we use on Wall Street, saying, all right, you get out of the equity markets and you go to the safe haven of the bond market. So obviously we saw that a little bit, Dwight. As we'll talk about, you had a little bit of pullback in the treasury yield today on the 10-year. But remember what we discussed a couple of weeks ago, guys. And people are right now somewhat leery of going even into the bond market, right? Because of what's going on in Japan. Their yields are much better than ours. And this fear that you're going to see some of these massive pension plans and sovereign wealth funds, et cetera, from around the world cashing in here in the U.S. in the bond market and redeploying that capital over to Japan or some of the other Asian markets that are paying a higher yield. And so, yeah, Dwight, I don't know at this point. It's too soon to tell. Normally, I'd say absolutely the answer is yes. But now with this Bank of Japan situation, I don't know if that's going to happen. It's really a coin toss.
To your point, in a normal market, You would have saw the bond market just go crazy today
Yes.
based upon
Yes.
the massive sell-off you saw.
That's right.
But we'll talk about it, but it wasn't as much as it could have
No.
been or should have been.
Yeah. No,
Historically.
not
Yeah, but I think a lot of that. I think a lot of
ahead.
that bond market was the jobs numbers this morning, and the
Jolts, yeah.
jolts and the open.
Yeah.
That's not a good thing.
Well, yeah, and that's you're right, Corey,
Yeah.
and that's that's one of the factors again that everybody's starting to look for. We had the Challenger Grain Christmas is the official name. Their job cuts. This was January January job cuts were up 117.8% year over year. Okay, now that's what the December number was. 36,000 layoffs across the country. Again, this is a number we have not seen dating all the way back to the year 2020. And so we know that layoffs are here. We know that they're coming. Now, Corey, to your exact point, we take that and then we add that into what came out just a few minutes after the Challenger job cut number, the JOLT number, and that was the initial claims and the continuing claims. This added insult to injury, right? Initial claims, again, as you hear me talk about each and every Thursday, these are the first time filing for state unemployment benefits, went up to 22,000 people. Doesn't sound like much to 231,000. It's not much, but it's going in the wrong direction. Then we look at the continuing claims, those that continue to be on the state unemployment benefit, up 25,000, rose from 1.819 million the previous week to now 1,844,000 that are collecting the state unemployment benefit. So again, not huge numbers in retrospect, but heading the wrong direction. And then, Corey, great job bringing up the JOLTS number. That was definitely one of the situations. So overall, tough day. I think you get the point. I can sit here and go through all these stocks that sold off. I just want to tell you about Amazon, and then I want to hit it when we come back from the break. The stock finished down $10.30 ahead of its earnings numbers that came out after the close. Again, unfortunately, not good performance we're seeing on the stock right now. It's driving the futures down. Amazon finished the day down 4.42% to $222.69. Tesla was another one down about $9.08, almost a 2.25% loss. So we'll tell you what Amazon did. And then, oh, by the way, I forgot to tell you about the topic today. Ooh, Mr. Edge. You worry me when you send your email and you go, interesting. Delve deep into the report, and we are seeing some real estate signs of slowing. Are we not, my friend?
Yes, it's
Oh, geez, we are way late.
Go for it. We'll talk about it.
You know
after.
what? Yeah, my goodness, I'm on my soapbox there. Let's turn over to Chris and Snow right now, Traffic Center. Back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard of Highlands Mortgage, Corey Edge of Edge Realty. All right, let's get the bad news out of the way. And then, unfortunately, I've got to give you a little bit more bad news. Finished down 593 on the Dow Jones Industrial Average, a 1.2% loss to a close of 48,908. NASDAQ lost 364 points, 1.59%. S&P giving up 84 points, finished the day at 6,798. And the Russell 2000 down 47 points, 1.79%. So, again, there was really no area to hide whatsoever. It was just one of those situations. Now, remember, we hit our 52-week high not long ago. Matter of fact, it was on February the 3rd when the Dow Jones Industrial Average hit, again, 49,653. Again, we closed at 48,908. So, again, we're finding ourselves in a situation where very quickly, we're seeing things beginning to deteriorate. So here we are, roughly 350 points, somewhere around there off of the high. So nothing major yet. Be a worse story on the NASDAQ side of things, which I don't have time to go through, but you get the picture. Now, before I turn it over to Dwight on the the bond market side, I do want to tell you about what's going on with Amazon. Company reported earnings after the close, as we said. Now, regular session, $10.30 loss, as I mentioned, 4.42% decline to $222.69. Right now, I'm watching it in the after hours. It is down $22.89, a 10.28% loss to $199.80. Here's what's going on. Current numbers, or numbers for the current quarter or previous quarter, I should say, they were good. They made $1.95 per share. Estimates were $1.97. Revenue, $213.39 billion. Estimates, $211.33 billion. Amazon Web Services, $35.58 billion. Estimates, $34.93 billion. And finally, advertising, $21.32 billion. Estimates close to that, $21.16 billion. So what's the problem? Well, Corey brought it up today. I brought it up yesterday. It's this CapEx spending. This is the theme. I don't think, guys, in my career, I've ever seen the street really pay much of attention to CapEx spending. But they are now, because this is, again, what we've dealt with in the past few months. can these companies get a return on their investment, right? When you're a tech company and you're plowing literally hundreds of billions of dollars back into the AI space, whether it's data center build out, whatever the number is, that's Wall Street's concern, as it has been. Can you get an ROI on your money? Well, as we saw with Google yesterday, their CapEx expenditures were double from what they were in 2025. And it was looking like the same situation, almost double, for Amazon. Here's what the company said on their conference call. They project their CapEx spending to hit $200 billion this year. I think it's one of the largest ones I've seen. Analysts were looking for $146.6 billion. To put it in perspective, a year ago, they had CapEx spending of $131 billion. Now, guys, we're not just talking the old days of, my gosh, they're going to spend a couple billion this quarter or, whatever. We are talking hundreds of billions of dollars. That's how much money these tech companies are pouring back into the AI space. Lord knows, we all hope and pray that they are correct and they're going to get a nice ROI on it. If not, my gosh, what a disaster it could be. And that's something we have to watch. Corey, any input from you on that?
I was listening to a gentleman talk about it afterwards, and he said, after they reported, and he said, I got to do my numbers, but just looking at this, if they spend $200 billion, they're going to be cash negative at the end of the year. They're not going to have a buffer.
Which Amazon will
anymore.
do. Yeah,
Yes.
remember, Amazon will do that, and that's when you see pressure. But that's a great point you bring up. That's a great point.
So and they're taking not just Amazon, but they're starting to take on debt, and so it's just a new calculation that people have to put into these companies.
That's a great point, Corey. Excellent job as always. If you, oh my gosh, holy moly! Excuse me, one sec, guys. Boy, if this is correct, I'm seeing the Dow futures down 752 points right now. It is correct. It just changed on me.
Wow.
52 points right now. The Dow futures are down. NASDAQs are down 577, and the S&P futures are down 121. Now, obviously very early. Again, we just started trading in the after hours at 3 o'clock our time. Let's hope these numbers don't hold. This could be a very, very tough day tomorrow. Remember, we're supposed to have non-farm payroll numbers tomorrow, but thanks to the government shutdown for the few days, they've postponed it till February 11th. All right, my friend, the floor is all yours. Let's talk about the bond market. 7 basis point decrease on the 10-year, 421. How do we do on the mortgage side? What's your opinion right now?
Well, John, I think they held some cards back today. Mortgage, when you go into the mortgage-backed securities, we finished up 31 basis points. I mean, a great day. You would have thought we would have had a lot more movement in the mortgages, but I think they're just a little bit scared or maybe cautious that maybe this is a one-off or something. So you saw a 3 basis point decline in the 30-year fixed, according to Mortgage News Daily, to 6.17. Again, we'll take it. I mean,
It's just not budging.
It's just not moving. Budging. I guess the winners are the FHA VA. They're at 5.8. So, John, I mean, again, we've talked about these seller concessions. If you get a good sizable seller concession, I quoted a 4.5 today on a VA.
Did you?
With a big concession, yeah. But I mean, so there are some movements down into that range. But I expected when I started to see this, mortgage-backed, movement, I'm thinking, boy, we're going to get a price change. We're going to get 3 or 4 today. We didn't get any. That I know of, right? So, so we'll have to wait and see.
I'm trying to go back to my notes, Dwight, so bear with me here. From yesterday, when you had the Mortgage Bankers Association release their mortgage app numbers for the week, if I remember, they were down a little over 8% from the previous week.
Yeah. Well, I mean, I think there's been a stall in this for whatever reason. It's psychological. I don't know. I mean, I think the jobs numbers, people are afraid right now. I think Corey said that a couple of weeks ago. People are afraid. It doesn't matter if rates are 2%. If you don't have a job, it doesn't matter.
That's right. That's right. Yeah. Exactly. Well, so much for the Trump Holmes bump, right, guys, that we touched on Tuesday? I haven't heard any more about that one.
The interesting thing, and this with your world, which affects both Dwight and I also, Trump could drop a tweet tonight about,
yes, he could.
We're going to make Bitcoin, whatever, the currency of Washington. You know what I mean? And this whole thing turns around. And he's very, he's very in tune. He thinks the market is his
barometer of success or failure. Mm-hmm.
Correct. And so,
which in a sense it is.
Yeah.
As the saying goes, at election time, people vote with their wallet, right? I.e. their 401k.
And it's an election year, so.
It is. Yep. You're right. That's a great reminder, Corey. Yeah. Never count it out. But right now, looking a little bit on the rough side. All right. When we come back, speaking of rough side, I'm going to give you a little hint. These were not good numbers, unfortunately, that we got in January in regards to the local real estate data. So the boys are going to break it down, tell you what the average or the median price is, how long it's taken to sell a home, all the details you need to know to make an informed decision whether you're buying or selling real estate. We've got that information for you for the month of January. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Corey Edge of Edge Realty, Dwight Millard of Highlands Mortgage. All right, once again, a little bit of a tough day today, as we discussed all the reasons behind it. And, oh my gosh, guys, holy moly! I'm sorry, I just brought up a new fresh screen on CNBC. Bitcoin right now is down $9,890.57. That's why the futures are selling off.
Wow.
7% loss. 3,513. Holy moly. Okay, I can see this can be one of these shows where this news is going to continue to change very rapidly as we progress through the show. So bear with us for our informality, but you want the information, we've got it. All right, let's go again to a recap of today. We finished down 593 on the Dow, NASDAQ lost 364, S&P down 84. All right, it's time that we get into our local real estate news and really get a good idea as to what's going on. We gave you a little bit of a hint at the beginning of the show that unfortunately this January data is not good. At least it looks like it on the surface. But this is why you need these two gentlemen to put their professional opinions into it, because a lot of times the numbers aren't really what the true story is that's going on. Bailey, if you want, go ahead and bring this market report up on the screen for those that will be watching us on YouTube, and they can follow along on this data. Sound good? All right, perfect. Okay, Mr. Edge, the floor is all yours, as we always do. Let's get down to the data. We always start with our medium sales price, $549,900 for single-family residences in Washoe County, including Reno and Sparks. Take it away.
Typically, John, when you deliver bad news on one of our shows, I try to deliver good news with the market report.
I know.
But that's not happening today. I mean,
boy.
So we've always talked about this report is good or bad depending on if you're a buyer or seller. I always kind of look at it from a seller's perspective, because that's most of what I do, and we all own houses and blah, 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 blah. From a seller's perspective, this report is a little scary, to be honest with you. There's a lot of red down arrows. There's some green up arrows that are on parts of the report you don't want them on. But to your point, median sales price, January 2026, 549,900. That's down 6% from December of 25. So just 1 month ago, down almost 4%, 3.7 from a year ago, January. And to remind everybody, this is Washoe County, stick-built homes, Reno, Sparks. That's it. That's what this covers. And not that we don't see some fluctuation here and there, but typically you should be coming out of things right now, and we'll see where this leads. But I don't like those big red arrows.
Corey, can I add something? What you see, and you did that perfectly, it's Reno, Sparks. Don't you think the outlying areas are even worse?
Yes, and I can send that, and I should have looked at it today. I don't know how much worse, Dwight, but it's not going to help it. It's not going to flip us around. Let's put it that way.
It's a great point, Dwight. It's a great point. Okay, folks, again, if you're following us on YouTube, you can see, again, the chart going down. Pretty nasty fall off here. Okay, Corey, so the question going through everyone's mind is, what the hell happened? Why median home price dropping 6% month over month? I mean, that's severe.
It's severe. So it could be a few things, and we'll see over the next couple months. The number, it's down from December, so there could have been fewer sales in December, so it makes any price decrease seem bigger than it is. We'll see. We had really good weather, so December was stronger than it usually is. But there's a lot of complacency in the market right now. We talked about it on Tuesday. We talked about it last week. What's going on in your world doesn't help anything because people get even more nervous. I was looking at a house today that was a previous client of mine and looking at comps around the house for her, and there were prices in her neighborhood that have dropped in excess of $200,000 just in the last 2 months, and they're still not sold. They're still not pending yet. So I don't want to sound like...
Let me stop you real quick. What kind of price range are we looking at? Let's put it in a percentage basis, roughly. Are these multi-millions or are these 700,000?
These are 700 to a million tops.
Okay, so 200,000 is very significant.
Yeah, it could be a 10, 15, 20% change. And that's buyer or sellers trying to find price discovery and buyers saying, The thing with buyers is as soon as they see that, one intuition is to jump on it. The other intuition is like, well, wait a minute. Maybe I don't want to catch a falling knife. So I'm going to sit back and see where this goes. And there were multiple, John. In this little neighborhood, there were at least 6 of them that had dropped over 100,000 in the last 2 months.
What does that do to the psychology of that seller? Are they in panic mode yet? Or are they going to the realtor and going, what do I do? How much more do you think we need to reduce it? What's going on through their minds?
Well, I'll give you the real story off air, but the people that have already gone through the reduction and the house isn't selling yet, you start to get a little worried about it. The people that are new to the market think, well, that's their house. My house is $200,000 better than theirs, so I'll get mine no problem. 2 months from now, they'll be in that same price range if they really want to sell it. So it's a hard lesson for people to learn.
Okay. Dwight, anything you want to add to that?
No, he did a perfect job on that. It's a trend, but Corey's been alluding to this for a while.
Yeah. Okay. Let's go to the closed sales, guys. This obviously ties in when you're seeing homes drop 6% in 1 month, December to January. You're not going to be selling as many homes. So closed sales, only 273, Corey, down 28.7% from December to January, down 3.9% year over year.
Yeah, that's, again, another large number. And so the caveat to that is when we talked about this report with Jason in December, the weather's been great, the rates have been stable, everything's good. We thought, wow, look at December. December's kind of ramped up. Maybe we're going to start our spring selling season early and everybody's going to get in line. Obviously, that didn't happen in January. So the 28.7% drop, you're coming off what was a higher than normal December number. But still, I mean, it should have at least held firm or gone sideways. The fact that it's down doesn't make people feel warm and fuzzy about it. And again, it takes a buyer and to me puts them on the fence to say, maybe I can wait another couple months and see where this shakes out, and maybe get a better deal.
What does this do to your industry? I'm thinking to myself as you're explaining that, I'm going, I don't know how many active real estate professionals there are in Washoe County, but 273, that tells me there's a lot of realtors not doing much business right now.
There's about, I'm going to be off on the number a little bit. I want to say there's pushing 3,000 active agents. And so in a lot of them, and they're all great, a lot of them have never been through a type of market that we may be starting, or maybe we're not. I have no idea. But they've never been through it. And so to them, it may be this is a historic time to buy because prices are going to ramp back up. I look at it this and say, maybe you're smart to sit on the fence and see what happens. What I would gauge my sellers is, look at these prices and let's be realistic. If this thing does start to fall apart, you need to be ahead of that curve or be prepared to stay in your house, which is the other option.
In English, yeah, either stay in the house, reduce the price, offer the concessions, get out.
Yep. If you need to be out, you need to be strong with it.
All right. Median days to contract up 7.9%, 41 days. Again, no surprise due to the closed sales numbers. So it's taking longer to get into contract. That number is up. I didn't like this year over year number though, Corey, up 20.6% year over year.
Yeah. 8% month over month. You can kind of say, well, it's a small number. It works, but we're still almost 21% higher than last January.
Mm-hmm.
Prices, again, I don't want to sound, like the whole thing's crashing, but prices are heading down. Closed sales are heading down. The time it takes to sell is heading up. So if you're a seller, all these numbers are working against you. If you're a buyer, this is the type of report you've been waiting to see.
Yeah.
But again, back to catching the falling knife, right? It's like, man, this stock has been trading at $300 and look at it today, it's at $200. Smart person says, common sense says, don't touch it. It's going to drop from 200 to 100, right? It's this human nature, right? We always, the old Kmart days, remember those, Dwight? Kmart days, the flashing blue lights, it's on sale. Real estate and stock market, when it's on sale, no one wants to show up and buy.
Well,
so it's
and
just
nature.
Like
you talked about earlier, Bitcoin's down basically 50%. So does that mean it's a great deal, or that means stand back? Nobody knows. That's
right. Exactly. Okay, let's go to our next one. The median sold dollar amount per square foot, $311, down 4% month over month, down 1% year over year. So we're kind of holding steady on that one, Court.
Yeah, and that one's always kind of held steady. The problem is the cost to build these houses and to replace them is not going down.
Mm-hmm.
I mean, who was the best? The best stock in the market today was Travelers. You want to know why? Because they're gouging
Yes.
everybody on their homeowners insurance. You know what I mean? The cost of all this stuff is still going through the roof. So the only thing that can change is what somebody's willing to pay you for it, even if it costs you more than that to replicate it.
Right, right, exactly. All right, I don't like this one. This is a significant move higher that we don't want to see. Number of new listings, again, we're going December to January. Number of new listings, 381, a 62.1% increase month over month, down 4.5% year over year. A lot of people starting to panic is what that tells me, Corey.
Yeah, and that is, again, we're going to come off low numbers because it was December. So you're going to see a bump there no matter what in new listings. But 62%, I mean, that, again, this is music to a buyer's ears because
Yes.
more to choose from. It's going to force everybody, just like my example in the neighborhood. Now there's more competition. Now we got to get even lower because this buyer has choices. And so the more houses that come on the market, it's going to keep pressure on those prices. And then sellers are going to have a hard decision to make.
Yeah. Let's before we go to break, let's tie another number that's very similar to that, or ties into the new listing. And that is active inventories, 645 homes, down 12.1%. So new listings up, active inventory down.
Yeah, and that one will flush out. I think that active inventory will probably turn, February, March, somewhere in there, if all these numbers hold true, because it's all going to depend on the buyers. For years we said, oh, there's not enough houses and there's so many buyers. Well, now we'll find out, right? Now you're going to get more houses and we'll be able to see how many buyers are really out there that are willing to pull the trigger.
All right. We come back, we'll wrap up with the months of inventory. Again, unfortunately, not a good number there. Give you an update on the futures, what's going on with this massive sell-off we're witnessing right now in the cryptocurrency. Let's wrap it up with Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Before we get the boys' phone numbers, let's give you a little bit of good news here. I don't know if we had a bad quote on the futures or what it was. Dow futures are down 185, no longer down over 700. Same thing with the NASDAQs. They were down significantly, and they're now down 284. S&P is down 44. Craziness going on. I just want to give you an update on the Bitcoin. Boy, Corey, you and I were too conservative with our all-time high. I was looking this up during the break. All-time high on Bitcoin. Doggone it, I just had it right in front of me here. No, 126.
Okay.
Yeah, 126,000. Yeah, right now trading at 62,836, down $10,602. So, man, oh man, oh man. Okay, now let's go back to our topic today. We're talking about, again, our local January real estate report. Corey, let's get to the final report, our months of inventory, right? This tells us how many homes are out there. How are we looking there?
Yeah, so 2.4 months worth of inventory, up almost 24% month over month, down 9% year over year. Again, a balanced market, they say, is 6 months. I think around here, 3 or 4 months is about normal. I looked at this report back in 2016, which a lot of these numbers were different, but the month supply in January of 2016 was like 3.2. So 3 to 4 is about normal for this market. Again, as a buyer, you want to see that number go higher. As a seller, you need it to go lower to keep your prices. As we were talking about off the break, this report to a buyer is like a breath of fresh air that things might start to be cracking. And we've always talked about, if you're in the market to buy and you have a long-term plan, then you can forget some of this noise, get out there, find the house you want, and then just set it and forget it for 10 or 20 years or however long you and your family or whoever's going to stay there and see what happens.
Dwight, I want to ask you this question. I'm going to bring it back to Corey. So you, from the lending standpoint, are we seeing any pressure with the home builders, the national home builders? Are they reducing prices because we're seeing this in the existing market? What's going on there?
Yeah, it's all over the place, John. I mean, whether you're a national or even a local or regional, you're having to compete with everybody around you, John, and everybody. You take the large, national builders, they're cutting a lot, right? So you got to just kind of, I always said, in the mortgage world, Wells Fargo leaned left. You didn't have to lean as far, but you had to lean left. So, it's kind of the same thing.
In other words.
The builders are getting, here's what I can tell you, and everybody I've talked to, the builders are getting more traffic, but it's not equating yet to contracts, executed contracts. So they're getting some, so people are looking, kind of maybe feeling this report, didn't know it existed, but feeling it, and they're out there kind of living it right now.
Once again, if you want to see this report, just make sure you pick us up on YouTube, and here in about an hour, we'll have it up live, and you can see this exact report. And like I said, it's a lot of graphs, unfortunately, pointing down. Corey, real quick, pretty much echo everything Dwight has said as far as the home builders.
Oh, yes. Yeah. And I don't know specifics. I haven't read a bunch of reports, but I can only imagine typically what we're going through is what they're going through. So I think they would agree with a lot of this.
Okay. All right, guys, 30 seconds left. Dwight, your advice and phone number.
2022. If you're a seller, get with somebody like Corey, stay the course. If you're a buyer, kind of keep a real close eye on it.
Perfect. Corey, phone number?
673-6700. And I agree with Dwight. If you're a buyer, start shopping. Now might be the time to do it. If you're a seller, you have to be realistic. Or you can try to sit through this, but it may just be the beginning of it. Who knows?
Yeah, absolutely. Well, again, it can all change here in a couple months when we have a new Federal Reserve Chairman, Kevin Wirsch, if he passes the Senate confirmation, which there's already some flack out there that he's going to have a hard time, but we will say I think he'll end up getting it and gets in there. Maybe right away. Wouldn't that be something, Dwight? First day on the job, and he comes in and calls an emergency rate meeting and cuts rates by 50 basis points.
Yeah.
Could be a whole different ballgame at that
Me.
point. Yeah, I know. Nothing would surprise us. All right, boys. Excellent job, Corey. Thanks so much for providing this information. It's great insight to see what's going on. All righty, folks. Don't miss tomorrow's show. We're going to have a wild ride, I have a feeling, tomorrow. God bless. Have a great afternoon. We'll see you tomorrow on the Jon Sanchez Show. See you, boys.
Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited and Equal Housing Lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.